a good side and a bad side to higher bond yields. The good thing is that monetary policy is finally transmitted through markets to the real economy. Earlier in the year, we were worrying that central banks were tightening monetary policy, yet financial conditions had eased. And so now the overall level of financial conditions is more aligned with a tight stance of monetary policy. So that's good news for central banks. But of course, on the other hand, borrowers have to pay higher interest rates, and that could put some pressure on borrowers. We do see that economic activity is slowing down, and credit losses are rising to some degree. But of course, that is what is needed to get inflation down. So two sides to the story.
Yeah. For sure, and a great point, retransmission mechanism. But let me just ask you what you're seeing in terms of capital flows, because again, it's not just one country alone, it's one country versus another. And I think it's interesting to see that rising bond yield environment has also in the last few months been accompanied by a stronger dollar as well.
Absolutely. So the dollar had weakened earlier and is now rising again, and that is of course reflective of the higher yields and the yield differentials that have been moving. So there are some readjustments in capital flows, but let me just say that emerging markets have been incredibly resilient relative to this monetary tightening cycle. So yes, capital flows have cooled to some extent, but there hasn't been a disorderly reversal of capital flows. And that is a testament to the good policies across emerging markets, very different from 15 or 20 years ago when we saw so much instability in emerging markets. Today, emerging markets are a beacon of strength and resilience.
Now, one of the topics that we have been assessing so far this week is obviously in the wake of what has happened in Israel, and we're just trying to understand what this could actually mean for the global economy. But I would like to get your thoughts on what's, could it mean for financial markets, because we saw oil prices already going up on the back of that event. So I'd just like to ask you, sir, really, do you see that this, complexity in geopolitics, could that actually be transmitted to financial markets?
Yeah, so we are seeing, of course, higher volatility. Oil prices could be more volatile going forward. And overall, geopolitical tensions could be increasing further. These are all headwinds for financial markets generally. We're monitoring the situation closely, and we're, of course, saddened by the loss of life.
I would also like to get your thoughts on something that I heard last week when I was with the Greek Prime Minister, because he mentioned to me that essentially the answer to migration was more money. The answer to climate change was more money. His answer for all the problems I put forward was more money. So what I'd like to understand from you is whether you're thinking that governments have just become too complacent about higher debts.
That's an excellent point. I do worry about the debt trajectory going forward. Already today we see that though major emerging markets are very stable, some smaller emerging markets with debt problems do have vulnerabilities. Some of them have to restructure their debt, and their funding costs have risen sharply. Overall, in the world, we have seen that debt has risen significantly with COVID. COVID, of course, was the first instance in recent years where the solution was more money, more fiscal spending, more debt. And there are many other ways to spend, but we do have to keep in mind that high debt is costly. It's costly for the future, for future generations, and I think more conservatism in terms of overall debt is extremely important for many countries. Of course, it's specific depending on the country circumstance, but the overall level of debt is high, and that is risky.
Yeah.